Hi, and welcome to The Curve Weekly, the podcast that keeps you up to date with all the money, business, and stock market tea.
Everyone should experience first class at least once in their lives, and Annie shouldn't miss out just because she can't afford it.
Help me, I'm poor.
Well, this is our third podcast record. We have another meeting in about half an hour, so this is going to be a really quick episode.
Yeah, sorry everyone. God, things to people to see. However, do you know what I did want to just quickly share at the start of this because I thought it was so cute?
Okay, we've got 30 seconds. So hit me. No.
Could you please talk about your Valentine's Day and the note that you got from Flower Man?
Oh, yes. As long as you talk about your Valentine's that you got, I'm happy to share.
That's not fair. You're in a relationship, you know? Mine's temperamental.
Temperamental? Temperamental?
No, just temperamental, you know?
Yes. So bless his heart, Flower Man sends me flowers naturally on Valentine's Day because he's Flower Man. But the note was the cutest, and the note said, "Breaking news: Flower Man retires." He's like, "Thanks for encouraging me to loud budget this year. My loud budgeting is no more flowers." And I was like, no. No, I have to approve the loud budgeting. Thank you. So,
but the other cutest thing ever is that her other loud budgeting was not getting her nails done because Vic loves a manicure, but isn't allowed to spend money on it. And he went and got her a voucher to get her nails done.
Yes, it was
we love it.
Very cute. He listens, which is great.
Also, sorry, but they did a Zoom date because he's in London at the moment, and they had like wine and food.
Okay.
Sorry, but so cute. Okay,
your turn.
No.
Excuse me.
Oh, I'm sorry. Come on.
Okay.
Give a gala break. I got a delicious salmon bagel in the morning.
So I've got flowers too.
Yeah, okay. Continue.
Oh gosh, we laugh. Anyway, we have had I actually laughed out loud when I read this. We've had some pretty funny news, although me and Sophie have very different sense of humor, but that's okay, especially when it comes to finances. No, but it was quite a bit of a blowout. So you know the company Lyft, Uber's competitor. Yeah. We don't have it in New Zealand, but it is in lots of other countries around the world. So they announced their financial result. There's a lot of people watching your financial result. It's a big deal for the company. You know, sometimes it's really good, sometimes it's really bad. Anyway, you put out the press release and then you follow it up with a call to investors, and anyone can dial in and listen. And so what happened with Lyft is they put a decimal point in the wrong place, which made their result seem absolutely amazing. And it was to do with their profit. They put the decimal point in the wrong place, and the shares went up 60%, 60 in one day, because everyone thought they were going to do way better than they actually did. And then they had to put out another release saying, oh, no, sorry. So they said,
it's like the Oscars. It's like having to give someone a medal and then being like, actually, you don't get that. It's
honestly but also a massive move like that with the share price. Like you've got someone's head is rolling. Probably some poor newbie at the company
probably did it.
Gosh, bless their little heart. But anyway, so it was to do with their profit margins. So your margin is effectively the percentage that you have left over as profit after you've taken out your expenses. So you've got revenue minus your expenses gives you a profit, and then you put that back on top of your revenue as a calculation. Anyway, so they were saying that their margin was going to expand by 5%, but it was actually supposed to be 0.5%. So they were saying they were going to be way more profitable than what they actually were. So they were saying that their profit was going to be 300 million in the future, not 100 million. So yeah, a big stuff up. But it'll be interesting to see what happens, because there could be people that bought shares when they were up, say 60%, and then now they've fallen. So there could be a lot of lawsuits. There could be lawsuits. There could be a lot of repercussions.
So could you say I wouldn't have bought them because you gave out false information?
You gave false information, and now I bought shares when they were up 60%, and now they've fallen.
Oh shit!
That's on you. So there could be a lot of repercussions from that, but also just kind of a bit embarrassing. It was the lady who's the CFO of the company. She had to come out and say, sorry, what we released to the market before the fall was actually incorrect. But in that time, like markets move so quickly. And that's a pretty
imagine, the poor thing. It's like pie-faced, just hit me in the face with it.
Yeah.
Oh, no.
But ultimately, it's her responsibility because she's the most senior numbers person. Yeah, which is quite.
I'm kind of gutted to hear that. Like, that sucks.
Yeah, I haven't never seen such a major F-up.
Faux pas.
Yeah. Anyway. But Lyft, they also announced that they're laying off about 1,000 employees as well.
So they've got to pay for their legal fees.
Yeah, probably about 2,000 people are losing their job now. Yes, no, they have been cutting costs to try and make themselves more profitable, and we're seeing that with Uber as well. There's a lot of strikes going on at the moment, actually, with Uber, Lyft, Deliveroo, all those kind of what do you call them?
Digital taxis?
Or delivery people. Yeah. Delivery people.
Yeah,
all going on, a lot of them are going on strike due to pay and working conditions. So because you're not technically an employee if you're an Uber driver, you're a contractor, and therefore you don't get the perks, but then you work certain hours. So there's lots of.
It would be pretty shit to be like on a bike delivering a pizza
in the rain,
going up a hill, delivering it, and then them being like, it's cold. You're like, yeah, well, actually.
Oh, yeah. I know. It's funny when it's raining and I'm like, I'm going to order Uber Eats. And then the guy comes to the door absolutely drenched.
Oh, nah.
And I'm just like, I'm so sorry. But thank you.
Well, you also won't be doing that this year. You won't have anything to feel bad about since you're not going to be ordering any Uber Eats.
Yes, I know. I actually did it the other night. My sister was like, should we get Uber Eats? I was like, no, I'm going to have eggs on toast.
Do you know what's pretty funny is another one of Vic's loud budgeting is the coffee, like the takeaway coffee. And she's been called out twice publicly by people being like, excuse me, this coffee you're drinking in the cafe, does this count as one of your takeaways? She's like, oh, shit.
I was like, I kind of have to. Yeah, like this is the whole point, is that I'm going to be held accountable.
You're going to have to follow through.
Yeah, and then I went to another place. I was within my 2 takeaway limit, but I went to this other place and she was like, the barista's like, I love your podcast. So I was like, oh gosh, okay, good to know. I was like,
oh my God, while I remember, we had another shout out to do. Someone messaged us. Hold on, I've got to read this. Hey, Curve Girls, can I be cheeky and ask for a shout out on the pod? I'm tuning in from hospital. Sorry, it's actually not funny, by the way. I was hit by a motorbike while I was crossing the road in Angel yesterday.
It's in the UK.
Oh yeah, sorry, in London. And I was like, oh my God, are you okay? What happened? And she was like, I was just trying to get to Reformer Pilates. Can't let your guard down in London. And then she was like, lol. Well, I was actually wearing a white Maggie Marilyn puffer jacket and it's completely unscathed, which is crazy considering I was knocked very hard. My upper body is also completely uninjured. Anyway, she goes, moral of the story, Maggie Marilyn pace is clearly a worthwhile investment.
Oh my God, I love that.
Isn't that good? And I was like, do you know what? That's actually amazing. Firstly, that you sent us a message telling us. Secondly, that, you're okay. She sent photos of her injury. She's like, actually, she's fine. Like, she'll be fine. But then anyway, I text Maggie and I was like, hey, we got this message from this girl, Meg, blah, 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 blah. She was like, oh my God, totally. I'll give her one of our cute little singlets, like put her in touch with our team. And I was like, oh, so she's getting a free Maggie Marilyn singlet.
Do you know what? We're going to get so many messages now. People being like, hey, I tripped over in my Gucci shoes. Can I? Yeah. We're like, no. We don't have that kind of pulling power. Sorry. Oh
my God, how good would that be though if we did? One day.
Amazing. Look at you paying it forward, girl. Love that.
Love it. Sorry, back to the finance news. Also, Meg, hope you're okay.
Yes, hope
sending
you're okay.
our love. Hope you're okay.
I thought you were going to have some financial angle to that, and she was so glad she had insurance so she could fix her leg.
Oh no, sorry, no.
Okay.
But I thought that the investment piece on the Maggie Marilyn is still a good learner. Buy investment clothes,
buy quality. Yeah.
Mm-hmm.
Okay. Anyway, speaking of Ubers and Lyfts, Uber has actually their share prices hit a record high. So they're now at $80 a share and they were at $40 a share back in October. So if you'd invested in Uber in October, you would have doubled your money, which is only a few months ago. It's crazy.
Wow.
Yeah.
Do you know the great thing about that as well? I think it's a good example of when you invest, like for example, if it was Tesla or something that's done super, super, super well and you didn't invest, it's just also thinking there's always opportunities, not only within that same opportunity, i.e. company, but also outside of it. Like if you really wanted to invest in, I don't know, God, what's a company? Pineapple.com, which is not a company, but say you wanted to invest in Pineapple.com, it doubles its shares and you're like, damn, I should have done that. You never know, because 2 weeks later, a week later, it could still do really well. Like there's still opportunities within the same company as well as externally. Like you would think if you've invested in Uber or you haven't up until this point that you'd missed it.
Totally. You're like, everyone uses Uber. Everyone uses Uber Eats. And like you would think that, there's not any growth left in the share price. But they've actually just made, the reason why the share price has done so well is that they've made their first profit, their first annual profit for the year since they've been a public company, and they're listed in 2019. So now Uber is profitable, which is great. Kind of gives people a bit more confidence in the outlook of the business, because if you're constantly making a loss, that investors don't really like. It's good in the first couple of years if you're accelerating and growing and you're putting money back into the business, but eventually shareholders want to see a profit because that's what you pay dividends from.
But it also proves that your business model is actually going to work, right?
It's sustainable. Exactly. Yeah. You can't sustain losses after losses after losses. You need to be profitable to survive. Yeah. So
do you know what I think is an interesting business learning though, and something I hadn't really thought about until you shared Uber's news? You also can still be, I think my thoughts on business were, you're not a successful business unless you're instantly making money, which is not true.
No.
Sometimes you do need external capital to grow. Sometimes it takes a while to get the recipe right, or, be able to pay off your debts and blah, blah, blah. It doesn't mean just if you're making a loss that it's not a good idea or it's not going to be successful.
And it's kind of like with the curve. It's like if you...
I thought you were going to be like, we're in so much debt.
No.
It's like, are we? Let's talk about this after.
No, I'm meaning if you're in a real sweet spot of shit, let's just run. We've got so much growth. Like we've got so many women we want to talk to. We want to reach so many women globally. With Uber, they're like, let's just grow. We've got such a good opportunity. Let's keep reinvesting back into the business. Let's keep adding sales staff, expenses. It's like keep adding costs so that we can grow really quickly. And then once we've got scale, that's when we can start thinking about profit. And that's how a lot of these companies, these tech companies think. And yes, just because you're a public company doesn't mean that you are profitable. There's still going to be people that invest in you because they believe the story and they can see the opportunity and they can see that you will be profitable in time. But right now, there's just such a big opportunity. You just need to run. Just run as fast as you can. And in order to run, that takes money. So that's kind of, I guess, where Uber is coming from. It has been, but now they are profitable. They also announced they're doing a $7 billion share buyback. And this is the first.
Whoa, so they're buying $7 billion of their own shares.
Yes, yeah. So
huge.
Big green flag for Uber. Yes. So this is 88 million shares. So it's only about less than 5% of the shares that Uber offers to the public. So it's not a huge amount, but it's still a lot. Like $7 billion is a lot. And we say this is a green flag because companies don't buy back their own shares if they think the future doesn't look good. Yeah. So it's a really good sign.
If you're like, oh shit, things are dire, you're not going to go and buy your own shares.
And it's kind of like, you know what, we're in this with you. We're going to buy shares too because we think it's really good. We're going to invest alongside you. There's a whole lot of reasons this is a really positive announcement from the company. So
amazing.
Yeah. And just for context, they made $2 billion profit last year versus Lyft, which made a $300 million loss. So it kind of looks like Uber's winning this race.
Oh, yeah.
At the moment. Yes. And then quickly we had Amazon as well. So 2 weeks ago, actually, Amazon CEO Jeff Bezos said that he was going to sell up to 50 million Amazon shares. So that's about $9 billion. And so
of his own stock.
Yes. So
that's like the opposite of what Uber's doing.
Yes. Yeah. So he owns 900 million shares of Amazon and he's selling 50 million. So tiny percentage.
He probably wants a new boat or
exactly.
some new shoes or something.
Yeah. But he is selling about $9 billion and last week he sold $4 billion. So they kind of stagger it so they don't really impact the movement of the share price a lot. So he's done half of that. So he's he's made $4 billion last week just by selling stock. Like, it's crazy. But everyone's kind of trying to figure out the reason. And it seems like it's due to tax. So he's moving from
tax evade.
Not tax evade, but he's moving from Seattle to Miami, and he's relocating. They've got better tax payment percentages in Miami than they do in Washington. So quite interesting. It could
the fact that he's even worried about how much tax he's getting.
But this could save
it would
him
be a lot.
hundreds of millions of dollars. Like that's why. And yeah, when he first bought his shares, when he started Amazon, they're worth zero. And now they're worth billions and billions of dollars. The tax bill on that would be absolutely massive. So moving to a state where the tax rate is lower would have a huge impact for him, for someone selling billions of dollars of stock. Like, it's crazy.
There's a lot of people that live in random parts of the world because they don't get taxed there, or like there's apparently some island off of England. I can't remember. Is it
New Jersey?
Something?
Yeah.
I don't know. But I met this guy once who said he lived there with his family, and I was like, oh yeah, what do you do? Blah, blah. I was like, what a random place to live. And then I looked into it afterwards, and it's because he doesn't have to pay tax there.
Yeah.
So he's raking it in and then not paying tax.
If you could pay 10% tax versus 30, you do that for a number of years, that's a huge amount of money that is coming straight to you, or that you can invest, or it does make a huge difference, especially if you're earning a lot like Jeff Bezos. It can have a huge impact. So yeah, that's kind of why he's doing that. But yes, red flag is when CEO or founder sells their shares, but you have to look at it in relation to the size that he's selling. He's selling less than 5%.
Hey Vic, we've got to go. We've got a meeting.
We've got to go. Sorry.
But that was good. I loved that.
Yeah.
Really helpful.
Short
Okay,
and sweet.
chat in the meeting. Bye.
Okay, bye. Thank you so much for listening to The Curve Weekly. Make sure you hit the subscribe button to stay up to date with all the money, business, stock market news. And if you like what you heard, we would love a review. Thank you.
Yes, we would love a review. But if you did hate it, please, don't leave one if you hated it. No, but in all seriousness, could you please leave a review? Because it really helps other people find our cute little podcast.
And we hope you have a good week, and see you next Monday.
Bye.
Bye. Sweet. Yeah. See you next Tuesday. Lol. See you next Tuesday. I mean Monday.